call. Okay, calling the Audit Committee meeting to order. Do we need to do attendance?
You can call names for the committee.
Okay,
Doing a roll call.
roll call. Heidi Sweeney.
Here.
Pamela Dowd, here. Sean Omot, not here yet.
Absolutely. There we go. All right, so we're going to turn this over to Nancy and our auditor here this evening, who have the most latest audit reports for us tonight. Okay.
Today we have Keely Hines here from Bonadeo and Company. They have finished our internal audit. And last year, the board had requested that there be a review of our school lunch fund and also for payroll to be our two testing areas. And Keely will present the reports today.
Good evening, everyone. Thank you for having me. I'm going to start with the smaller report first, the Independent Internal Audit Report on payroll. So again, just to recap my role here at Oswego versus your external audit. So the Bonadeo Group has been named your internal audit, and that function is required based upon the school accountability legislation from way back when now, requiring that be an element that the district incorporate into their control environment. And so on an annual basis, myself and my team come out and conduct an annual update to the risk assessment, and then select the focused area of or areas of testing that we will do. So as Nancy had mentioned, the decision was made to take a look at the school lunch fund, any sort of trends, things like that, recommendations, and we'll get into the details of that, but as well as doing some payroll testing, specifically on a particular retro payroll run, given the vulnerability of having to do those manual calculations and those corrections, that a lot of times that's where a district sees some risk. So without any further ado, I will direct you to page 3 that'll really highlight the scope of the work that we had performed. So we had identified that there was a retro pay on November 19th and December 3rd. And what we did was we selected 5 12-month salaried employees as well as 20 hourly employees that received a retro. Obviously, the reason behind that is that the hourly is more subject to error, just given the fact that there's more manual calculation involved. And then in addition to that, we did actually take a quick step back just to ensure that the completeness of the folks receiving a retro payroll check seemed reasonable. So what we did is from the system obtained a data dump, so to speak, of the employees under that particular bargaining unit to compare that number to the number of individuals having received their retro, just to assume that to make sure that it didn't seem as though folks were missed altogether from receiving the retro payroll check. Testing went great. The only thing that we highlighted on page 1 was the fact that we identified just some very, very small differences in the pay rates that fell between 1 cent and 99 cents, and that's a byproduct of rounding and carrying that forward to an annual salary or an annual rate. So really no issues in terms of the completeness. It looked reasonable, as if everyone from that bargaining unit that should have been considered for that retro run was, and the 25 people that we recalculated were done so within the parameters of those tiny rounding differences. So that was great, and no further concerns related to that area. The second report is specifically focused on the school lunch fund. So this is the area that took the bulk of our internal audit testing hours. So on page 1, it highlights our executive summary and the purpose and the scope. And essentially what we did was took your entire school lunch fund operations and took a look at any sort of trends, what changes that were happening in revenues and expenditures, performed budget to actual, considered meal counts, cost of meals, all of those types of things. And as you all know, what's been happening in the school lunch fund over the last 36 months in particular has been a bit of the wild, wild west, to say the least, because students not being here 100% of the time, a shift from, of course, a population in which receive reduced or free to then everyone receiving free, now back to what was those pre-COVID rates. So a lot of different factors going on. So a handful of my districts did elect to take a look at this, start pulling together some historical data that doesn't necessarily indicate that something needs to change, because I, as I'm delivering some of these results to my districts, I'm reminding them that just even since we did this analysis, a lot has changed again. So kind of bear that in mind, but I think what it gives you is, again, that historical data and that touch point that then you can see what's happening during the 22 year end and now forward into the 23 fiscal year end, and really kind of see, okay, are we seeing any long-term changes that we need to make adjustments for, or are we starting to see some pre-pandemic trends and kind of things shaking out to be where they were before. So hopefully this data is helpful as you folks move forward and can help maybe facilitate additional conversations or analyses that might be required. On page 2 and into page 3 is what I call just a school lunch operations narrative. This is really just for your reference to be able to kind of remind yourself of that timeline in terms of what was happening and when, and what staffing may have looked like, and where food preparation and distribution was taking place, all in combination with these analytics and benchmark data that we're providing in the following pages. And then beginning on page 3, section 3, will provide you various exhibits with narratives following those exhibits that'll speak to and provide context to what is happening within that particular period, whether it be related to budget to actual, meal counts, again, the expenditures within the fund, things like that. I think for the purposes of this evening and focusing the conversation, I would like to pick up on page 15, which is section 4, and just provide some general observations with some recommendations and points for future consideration. And again, I want to acknowledge the fact that I know that this topic is always a little bit sensitive for folks, because when you're talking about wanting to give students food and ensure that you're able to provide to students and children at any point in time, we realize that those are all important elements that don't necessarily end up reflected in the data. So really bear in mind that this is just data and facts, and that certainly it may make sense that the district make different decisions that might contradict the data, and those are decisions that you folks and your board can make, but I just want to arm you with the facts and the figures that reflect the last 5 years or so at Oswego. So the first consideration point is that during the period of July 2020 through August 2020, families and students outside of the district lines could participate in the federally mandated free breakfast and lunch distribution. So based upon this definition, the district was running what we call an open site versus a closed site. With that, when operating an open site, meals are made available to all children in the area in which 50% of the children are from households that would be eligible for free or reduced priced meals. So what we're recommending is that in the event that something like this was to happen again and you were facilitating an open site, that you would want to ensure that you have some sort of means for measuring and documenting that meals are in fact eligible and that 50% benchmark is being met. Again, this is one of those things where opening it up to the community is a great decision for other reasons, but certainly trying to ensure that there's controls in place and that you're not making federal claims on expenditures that may have become gray and not been allowed within the parameters of the program. So, if something like this was to happen again, who knows? The rules could look completely different too. So it's just one of those things that a lot of the districts have had to kind of step back and reflect and say, okay, we somewhat have to acknowledge that if this was to happen again, we need to be maybe asking a little bit more upfront questions from your representatives, ensuring that there's a deeper understanding of the compliance, just so that you don't find yourself in a place where then the federal government wants to claw back any sort of claims that you made related to those meals. Yep. So consideration point 2 relates to the number of meals distributed. So obviously, as a result of the pandemic, there were instances in which your student count, of course, in person was 0 for a point in the end of the 2020 fiscal year, school year, and then hybrid learning models that kept your head count down. So in a direct correlation, your meal count distribution went down. So what happened was, given the fact that there are fixed costs associated with maintaining a program to facilitate and distribute the food, you have a baseline of, quote, revenue that you have to meet in order to break even. So one of the things that, sometimes some of the districts in this couple-year period have struggled with is, if I don't get the meals out the door and I can't charge for them and it's a fixed claim amount per meal, then this is all I'm going to get for revenue, and it is what it is. So the idea is that, again, if we end up in this situation, that the goal and the mission would be to try to explore as many options as possible in terms of upping that distribution, getting meals into students' hands, as many meals as you can at one time. If you've got them, give them everything that they can take. Figuring out how to collaborate with other community efforts and initiatives, again, just to try to get that count up, because certainly that's what you desire anyway, is to get the meals out to the students. But certainly when it's a situation in which it's all universally free and your revenue is being driven by those meals claimed, which is based on the distribution, you want to try to make every effort to distribute as many meals as possible.
We did, I know we delivered meals by bus. We sent multiple meals home. I agree with the recommendation, though, adding wherever you can, like trying to get the information out there to the public. I know recently we put out things on Facebook, letters that said, hey, everybody's eligible, if I remember correctly, this current school year. So, I do understand what you're saying. But I think we did we would send kids home, I think, with lunches for the whole week, didn't we, at one point in time?
There was a drop, though, from what Keely's saying is from the true pandemic, when we were feeding everybody and we were making all of those lunches and breakfast in the main cafeteria, and we were distributing those, to then when we went hybrid.
Okay.
So that's where the decrease came in.
I just would think that, I know my son stayed home for a period of time when we were hybrid. We wouldn't have needed meals delivered. So I think probably the difference in looking at that, because I just flipped back to look at your time period, because I agree with what you're saying.
Yeah.
But I think we probably came to a point where there were deliveries made, but then there were other folks who may not have signed up for deliveries.
Right.
I don't know that it was a lack of effort.
but,
Yeah.
right.
Agreed. Yep. Yep. Yeah, and this is, this outcome is not uncommon. A number of districts, took a hit to the fund balance and the school lunch fund because everybody was doing their best. But again, the goal being to try to get as many out under that circumstance so that you can get that, that claim in. But you're exactly right. Those folks that then, for whether it be the hybrid model or even went fully virtual for a period of time, if there truly wasn't a need, and maybe they were even a periodic buyer, right? Maybe once or twice a week, depending upon the menu or something like that, they then fell off the count. So a lot of districts struggled with this. I would say of the 15 or 20 districts that I have firsthand experience with, most experienced this versus the other. I had a couple that they were able to make lemonade from lemon, and they were able to get countless meals out and actually saw, an opposite effect. But I think a little bit of it had to do with their specific needs in their geographic area too. So it was really truly driving the desire for people to take those and find out how to get them. Consideration point number 3 talks about, in the event that meal distribution counts do not return to pre-pandemic levels, again, considering truly if expenditures need to be adjusted, right? Because with the school lunch fund, you budget what you think you're going to bring in, and you can't spend more than what you bring in. Eventually that'll catch up to you. So really taking a look at what you're bringing in for inventory, what is your head count, if, as a result of retirements or folks just naturally leaving from the district, those are opportunities to not lay off, but to really determine, okay, do we just need to reassign job duties and responsibilities with the resources we have, or do we really need to rehire and get fill that position? I do want to say that inventory levels and the amount of food purchased were in fact reduced during this time. So I think the folks that were kind of boots on the ground, they were recognizing that and making those kind of adjustments that needed to be made in real time, because you certainly were vulnerable for even a greater loss than what had happened. So, really kudos to them for trying to make those adjustments. And, I think the takeaway too is continuing to have that communication and that constant monitoring to see if something does need to be changed. Consideration point number 4 specifically speaks to budget to actual, of which in your packet there are some exhibits that lay out the full budget by individual line, each individual budgeted revenue and expenditure by line. And some of those variances were pretty significant. Some of that we certainly expect. Again, at the time that your 21 budget was put together, there was no known indication that the meals were going to be universally free at that time. So
it changed.
right. So you adopt this budget, you went in with the facts that you knew at that time, but certainly just wanted to point that out. But again, a pretty common trend that most districts experienced. But what I would do is really take a look at where those variances and what those variances looked like as far back as 17, and again, kind of see, is 22, 23, are we getting back in line with what it looked like pre-pandemic? And then consideration number 5, this really speaks to, again, monitoring food supplies and needs in relation to the demand for meals. As everybody knows, not only at the district, but when each of us go to the grocery store for our own household, the costs associated with the food has gone up tremendously. So really just something for management to consider to be, cognizant of. And I think a lot of the supply chain issues that some of the districts experienced, there was a period last year where a lot of them were struggling to even set a menu and be able to adhere to that. I think some of that, the dust around that has settled, but really just trying to manage those price points to the best of their ability and just keeping a close eye on that, because that average cost per meal, of course, based upon our diagrams, have gone up, but again, a very common trend that everybody is experiencing, but certainly want to encourage the monitoring of that.
What would have been your expectation? So you say the number of meals distributed went down about 35%, and then the food costs only went down by approximately 35%. Would you have expected it to be 40 or 40 plus?
Some of that too kind of depends on where you are with your inventory and how much you're holding and where you started. But certainly, given the fact that the distribution went down, we would want to see that cost go down a little bit more. But again, it's this, trying to, what comes first, the demand and the pull from the kids to take the food, or you stock up and then hope that they want it, and it's kind of this constant balancing act. And I mean, I will tell you, I saw analytics from other districts in which were far more drastic in terms of cost per meal going up, in that exponential difference between here's our meal distribution going down or our meal count going down, and the cost going way up, and really seeing fund balances in the school lunch fund, go into the deficit hundreds of thousands of dollars. And ultimately what that means is that it's very unlikely that the school lunch fund can recover that.
Right.
The school lunch fund is not designed to make money. You're not going to start charging $5 a meal. So really what ends up happening with that is that, okay, the general fund is ultimately going to have to pick that up if there's a long-standing deficit. So we are scheduled, just to kind of look ahead. Nancy, I know we sent you an engagement letter, so you have that. We typically start all over again with our risk assessments as soon as we get our external audit clients out by the 10/15 deadline, as well as allowing for you folks to finish that up so that you don't have two auditors at one time bothering you guys. So we can be ready to start and formally schedule your in our queue, but as soon as we have that signed engagement letter, we're looking at various dates within the month of November that I think Jimmy has perhaps reached out, or maybe not because of the engagement letter.
Your letter's already in the portal.
Okay. Oh, perfect. All right. I have not rechecked that, so okay. Great. Any other questions for me at this point? Okay. And oh, my pleasure. And certainly too, keep in mind, even ahead of the risk assessment, keep in mind if there is something that you would like us to focus on at the turn of the year when we do that internal audit testing. If there's even a particular analytic or something within the school lunch fund that you'd like us to check on, that can serve as like a secondary mini area with a primary focus elsewhere. So just let us know whatever suits your needs, but we'll plan to debrief again when we complete the risk assessment. Thank you.
Thanks, Keely.
Yes, you guys as well. Thank you.
We'll take a couple minutes recess so we can find the next auditor.
We're going to just take a few moments recess while we change auditors.
Go see if I can make sure. I'll go check. All right. Thank you.
Oh, thank you very much.
I'm just going to check the time. Right back.
Okay. We'll be in touch.
don't have mine. And Heidi's got a computer.
So, let me get the front.
I got it.
Okay. Okay.
Thanks. Thanks for coming back to us.
Hard copies? I can grab them. I'm just gonna grab them for you. Okay. Okay. Bring this back out of,
Okay, calling the next audit committee to order, please.
all right.
All right, so you should have received last week drafts of the basic financial statements.
Make sure that's on there, Tom. Click that up.
Is it on
There
now?
you go. Yep.
All right. Drafts of the basic financial statements, internal control communications, as well as an executive summary. Okay. And as you know, so the financial statements are in draft. We'll talk about the financial condition of the school district tonight. But one of the items that is not reflected in these financial statements is what the district chooses to do with year-end surplus. Okay, as you know, that's something that you wanted to discuss after this meeting. So, so the basic financial statements that you received should be about a 65-page document. A lot of good information in this document. We won't go through that document in detail. We'll focus on the executive summary, but just a few of the components that are in there is our audit opinion, an unqualified opinion, no material weaknesses or significant deficiencies. There's what's called a management discussion and analysis on pages 4 through 13. And again, that's just a discussion that talks about year-over-year variances. It talks about summary financial information, talks a little bit about your capital assets, long-term debt, and also some factors that impact the school district going forward. And that's something that's prepared by management, okay? But the idea is if you were to read through that 7 or 8 page summary, that you'd have kind of a global idea of what took place during the year. And that's what the executive summary tries to focus on, some of those key variances from one year to the next. Just kind of highlight some of those items in the executive summary. And again, the main focus in the general fund, or in the executive summary, is the general fund, okay? And so on the first page of the executive summary, page 1, so again, that's that 7 or 8 page document, says executive summary on the front of it. Okay, and again, this is if you were to take a snapshot as of June 30th, 2022, what the financial statements, financial conditions would look like. 1 second, I have June 30th, 2021 in front of me. Okay, and so again, if you were to take a picture as of June 30th, what the financial condition would look like of the general fund. And just a couple items to note, again, 22 on the left-hand column, 2021 on the right-hand column. And then a variance column there, and again, overall, you know, the district ended the year in good financial condition, okay? You have about $35 million in total assets, okay? Again, that's up about $5 million from last year. You know, the major components of that is cash, okay? $25 million in cash. You've got some receivables there, just your state and federal aid at the end of the year, BOCES aid. And then, you know, some inter-fund loans between other funds in the general fund. And then, so overall, a little over $35 million in total assets. Your liabilities, middle half of the page, what you owe. So you have about $7.3 million in total liabilities, okay? Again, a couple of the key components there, really the due to the retirement system. Again, that's really your obligation to primarily the teacher's retirement system. There's a small portion of that relates to the employee retirement system. And as you know, the systems basically say, here's a rate, you multiply that rate against your salary, and that's something that you actually pay to the system in the fall, okay? So it shows up as a liability as of June 30th, okay? And you can see that went up from last year, okay? Primarily because the rates increased, okay? So they went up to 9.8% of the salaries, and again, you'll see that continue to increase next year. If you recall, probably during your budget process, you talked about the rates continuing to go up. I think they're just a little over 10.25% of salaries, okay? So you'll continue to see that trend as it relates to the teacher's retirement system. The other key item to note here is in the accrued liabilities section. And again, as you know, the district is self-funded for your health insurance. So as part of that self-funding, there's a calculation that gets done to determine what portion of your health insurance is incurred but not yet reported, okay? And so what you're doing is you're setting dollars aside for claims that were incurred in June and May and so forth, but not paid for until after that, okay? So the majority of that 1.9 million relates to the health insurance, the IBNR items, okay? And that's really something that you want to make sure you monitor closely. In fact, we'll talk a little bit about that. You know, your claims are down this year for health insurance. That's one of the reasons we see some positive budgetary surplus. We'll talk about that in a few minutes. But when we look at the year-end IBNR calculation, we get reports from your third-party payer, okay, so who processes your claims, and those numbers came in, you know, a little bit higher than they were in the past. So they've identified actual known claims that are a little bit higher than last year's actual known claims, okay? So what that tells us is that there could be a delay in the processing of claims, okay? So you do have a nice calculation. You've added a little bit of an additional amount just in case those claims continue to trend upward, okay? So again, that's all been dollars that have been set aside, okay? Really, a couple of the other items of the deferred inflow just relates to your property taxes that you recognize but you don't collect until the fall, okay? So similar to the teacher's retirement contribution. And then the bottom half of the page, your fund balances, okay? So this is what you own, okay? So if you take your assets, 35 million less your liabilities and deferred inflows of about $8 million, you have a little over $27 million in total reserves and fund balance, okay? And as you can see, a portion of those dollars are set aside for restricted fund balances. You know, you've got some non-spendable fund balances. You've got some restricted fund balances. Those are there basically based on general municipal law, okay? So each of those reserves, there's some specific purposes for those reserves. So just to kind of continue to monitor those particular items. The other item there, that 516 is not necessarily for the school lunch deficit. So, but your restricted amounts, again, are basically your reserve accounts. And again, we'll look at those reserves on the next page, just kind of a little more detail on that. Your encumbrances, again, just commitments you've made at the end of the year that you will need to, that come in after the end of the year. So you've made commitments, but those items haven't been received. And then the undesignated fund balance at 7.8 million. So that's that amount that you're looking to get into compliance with the 4%. So you can see that's up from the prior year. And again, that's a result of your financial operations for the year. Okay, so again, you generated some positive surplus. So that non-spendable account, I believe that is for loans between the federal fund. So long-term loans, not the school lunch deficit, but those are considered non-spendable, okay? So again, the end of the year, you ended the year with a little over $27 million, and you can see your equity went up about $4.2 million, okay, from last year to this year. So it went from 22 million to 27 million, Okay, and we'll look at where those dollars came from as we look at the revenue and expenses. But do you have any questions on that snapshot before we go to the other pieces of the handout? Okay, so again, the reserve account, again, as you can see, there's not a lot of activity in the reserve accounts this year. As you know, the district, as part of your budget process, the district in the past has appropriated reserves and fund balance, and for the current year, you didn't appropriate any reserves and fund balance for the 2022 fiscal year, okay? And you didn't do that for the 2023 year. And so what that means is when we look at your year-end increase in equities, that it's going to be fairly close to what you generate in budgetary surpluses, and we'll see that in a few minutes. But as far as the reserve accounts go, you do have some reserves for the employee retirement, the teacher's retirement system, okay? Again, very positive reserves to have. They're there to help offset any potential spikes in the retirement system, okay? Because as you know, the first 2% of a rate increase, you have to absorb in your operating budget, okay? Because of the tax cap, right? Anything above a 2% rate increase, you can apply that or add that to the tax cap calculation. But again, if there's a rate increase of 2%, and you apply that to your eligible salaries, your eligible teachers' salaries, which is just about $35 million, okay? That's a much higher percent than 2%, okay? And so those reserves are there to help kind of smooth any spikes in those rate out, okay? You've got some dollars sitting in workers' compensation reserve. Of course, you're self-funded for workers' comp. So you have some dollars set aside there. And then that bottom one, that unemployment insurance reserve, again, those dollars are there for potential unemployment insurance claims, as you know, as part of kind of the long-term planning during the pandemic. Districts reviewed their reserves and allocated some funds into, unemployment insurance. Primarily, it's a fairly flexible reserve. So districts can look at that reserve and reallocate those dollars once they kind of get a good understanding of what's going on. And as you know, I think we've seen that folks are generally can't find employees right now. So certainly that's a reserve that you'll look to reallocate in the future. Okay, so again, got some dollars in there. Your employee benefit accrued liabilities, again, that's there for specific vested benefits. Okay, so sick day payouts, things in that lane, vacation payouts when someone retires. So you've got some dollars set aside. Your capital reserve, as you know, that's there for, again, part of your long-term planning. Okay, again, very important reserves to have because as you know, as you go through your planning for your capital-related items, and you look at future capital projects, these are very important reserves to have because they can really help reduce the impact to the taxpayers for the local portion of the project, okay? So certainly to develop those reserves, you've had that reserve for a couple years now. You've funded a little over $5 million into that reserve. So again, very beneficial reserve. Those reserves are a little more restrictive. They're capped, so the voters approve the creation of those reserves, and they approve a maximum amount, and that maximum amount is about $10 million for you folks for that reserve, and you funded it a little over $5 million, okay? So again, you can look to utilize those reserves as you develop your capital plan, and again, to reduce the local portion of a project, to reduce the impact of a project, okay? So again, very good reserve to have. And then the bottom two reserves for specific purposes, you've got a liability reserve as well as a statutory reserve. So again, specific areas that you could get claims on, and you've set some dollars aside on those. So again, very, very good reserves to have. You also have a small debt service reserve, a little over $1 million. Again, those dollars are just unspent bond proceeds or premiums from bonds. So again, having a plan to utilize those reserves as part of your budget process, okay? So those are the primary reserves you have. Again, The district is not appropriating any fund balance or reserves to support future budgets. So, that really does put you in a fairly good position to deal with any budgetary challenges. Because as you know, just to break even from one year to the next, you have to generate budgetary surpluses equal to what you're appropriating in reserves and fund balance. So as you know, as we look at where those dollars are generated, there's a nice little calculation we have on one of the pages that we'll see, okay? So that's a quick discussion of the reserves. Do you have any questions on the reserves at all? Okay.
Is it workers' comp or unemployment, the one that's limited for use based on how, there's like a calculation, a percent of the claims submitted?
So there's no specific calculation that you have to go through to determine how much you want to fund into those
No,
reserves?
to take out, because they're noted to be the flexible ones.
Yeah, good question. So those reserves are flexible because as the district looks at their long-term plan, you can look to determine how much you might be overfunded, if you will, in those reserves based on kind of past practice, right? And what your reserve plan is for your unemployment insurance, okay? And I believe you have a written reserve plan, right? Which talks about how you review each of these individual reserves. And I'm not sure, but your reserve plan may talk about a calculation, right, to determine.
We have a proposed plan that we tried to share with the board last year, but that plan was put on hold. But we do have information in there. But, we have a draft.
Yeah.
But we'll have to bring that back to the board.
Yeah, but there is
It's
no
not
necessarily specific calculation. In order to expend those dollars, they can't exceed what your current expense is for those programs.
That's what I was saying. In order to expense out of even a flexible reserve, it can't exceed our costs.
Yep, with the exception of the workers' comp and unemployment, where there's this window that if you feel those reserves are overfunded, and this is where they're flexible, you liquidate those reserves back into the general fund and repurpose them.
Thank you.
Okay, so there's a process you would go through. And the board is very involved in that process because they would take board action to liquidate those transactions. And some of the reserves are also flexible because they can be reallocated into other reserves, okay? And so the unemployment and workers' comp, you can just go right from one reserve into another reserve if you choose to do that, okay? And that's part of that process you would go through as you review the status of the reserves.
Time frame involved in that, so, let's say the board puts so much money into one of those reserves that's flexible, right? What's the time frame involved in that you have to do that within or by?
Well, there's
If
certain.
they want to change, I'm sorry, so they put money into a reserve and then they say, well, you know what? We want to put it into capital reserve, or, we may want to create a different reserve, or whatever have you. What's the time frame there?
Yeah, well, so again, if you read through the law, it talks about a 60-day window when you make that determination. And it's either, it's kind of really, it's a 120-day window because they say 60 days from the end of the fiscal year. So is that 60 days from May 1st through June 30th, or is it the 60 days afterwards? It's not specific in the law, okay? So we've generally just seen most districts interpret it that there's either 60 days before or 60 days after you can make that determination, okay?
Okay.
All right. Any other questions on reserves? But of course, we would also suggest you review it with your attorneys as well. All right, okay. So let's just kind of take a look at where some of those positive dollars came from that you were able to fund in, that you have at the end of the year, that 4.2 million that we talk a little bit about. Again, if we take a look at the revenue side of your budget, which you see on page 3 of the analysis, and again, a couple items just to note there. You can see on a $91 million budget, you collected a little over 93 million, so $91.5 billion budget. You collected 93.4, so about $1.8 million more than you had anticipated, okay? And just a couple, areas where you see some of those additional dollars. Primarily, it's in kind of the miscellaneous revenue area. Again, part of those dollars really relate to, the surplus refunds from other BOCES, okay, or from your BOCES component district. That's one of the pieces of that. And then there's also some miscellaneous revenues relating to things like prescription rebates and so forth that you get from your self-funded insured program, okay? And those generally end up in that code. And again, very difficult to predict from one year to the next how much the BOCES refund is going to be and or how much you're going to receive in rebates from your prescription program. Okay, so those are the two primary components of that. Sure, there could be a few other items in there, but I think those are the two primary items. So again, that's really where you generated the positive budgetary variance on the revenue side is really in that one category. Okay, you can see some of the other categories, the adjustment to the revenues. Okay, that's just the timing. I remember I said there's that deferred inflow of resources, which is your sales, your taxes. So that's just a change due to the timing of what your collections are for the last couple months of the year, okay? So that's what that item is, okay? Again, really nothing else too unusual. The transfers there, $100,000 transfer, again, those are transfers from some of the other funds that you didn't actually make from last year, okay? So again, of that $4 million, $1.8 million came from the revenue side of the budget, okay? And if we look at the next page, the expense side of the budget, okay? So on the expense side of the budget, again, you see that $91.9 million budget compared to 89.5. So you spent about $2.3 million less than you had anticipated, okay? So, generally where we're seeing some of those dollars, really it's a result of staff challenges. I think you're fairly consistent with many of our other school districts out there where there's been some challenges to fill positions, okay, which creates some of the budgetary surplus when you have some open positions during the year, okay? But on the revenue, the expense budget, again, you generated a positive $2.3 million on the revenue budget, or the expense budget. And I had mentioned that overall increase of $4.2 million, okay? And you can see, you take the expense surplus plus the revenue surplus, and there's a minor adjustment for those encumbrances to come up with the overall equity increase, okay? And again, this is a fairly clean calculation because you're not appropriating fund balance and reserves, and the thing that, which really does make it a little easier to manage when you're at that level, because again, had you, let's just say you appropriated $1 million to support the 2022 budget, then you would reduce that $4.2 million by $1 million, okay? Because again, just to break even, you've got to generate budgetary surpluses equal to that $4.2 million, okay? So again, because you're not appropriating fund balance and reserves, you see that the two surpluses and the minor adjustment to encumbrances equal that overall increase in fund balance, okay? So again, just a couple of the items there. All right, so that's the general fund. Do you have any questions or any other questions on the general fund before we talk about a couple of the other programs? Okay. The school lunch program, again, you did generate a profit this year in the school lunch program, as you know. Last year in the 2022 fiscal year, many of the school districts, all of the school district students received a free lunch, okay? And in addition, there was an increase to the retirement, or the rates that the state pays on some of those meals. So again, you're very consistent with many of our other school districts in seeing that you generated a strong profit in the school lunch program, but The challenge, as you know, is what's going to happen this year, right? And I don't believe you're a community-based school. You are, so is that the entire district is free. So you just want to look at your participation, okay? And if your participation is pretty consistent from one year to the next, that's really an important trigger measure to monitor, okay? On how your financial results will be. But again, if you recall, this has been an area that the district has seen some challenges in the past. And again, it's primarily, the challenges for food costs and labor costs, okay? So it is an area that you'll want to continue to monitor, okay? Miscellaneous special revenue funds really just ends up being your scholarship programs. So again, nothing too unusual there. The special aid fund, again, this discussion, just wanted to highlight this program again. We talked a little bit about the federal stimulus dollars that you received, okay? And as part of those federal stimulus dollars, those are being spent in this special aid fund. So the different federal and state grants that you receive, they're really spent outside the general fund, okay? And you can see in 2021, you had about $3.7 million in federal and state spending. There's, your UPK programs are also funneled through this special aid fund. And you can see that went up from about 3.7 million to almost 7.9 million, okay, in the current year. So again, you can see the increase in expenditures, and primarily those are the federal stimulus dollars, okay? That increase as a result of that, okay? And so that's something you just want to make sure you're monitoring, okay? Because, when we look at the results of operations right now, we do see some very positive financial results. And we also see a lot of new and expanded programs as a result of some of the federal stimulus monies, okay? And the challenge that you're going to have is if some of these federal stimulus programs that you really like the programs, or you see that they're successful programs, and you want to continue and maintain those programs and those staff, you're going to have to blend those back into the general fund once those stimulus monies go away, right? And remember, those stimulus monies are only here for a period of time, and the district has a plan on how you're going to spend those stimulus dollars. So you just want to make sure you're monitoring that plan and understand, things might look pretty good next year as well because of the stimulus funding, but what's going to happen the following year, right? When that stimulus money goes away, and if you have some programs that you've determined have been successful programs, or staff that, you started out in those programs, how do you get them back into the general fund, right? Because, unless there's some significant attrition, right? That's one way to do that, but again, you're only gonna really get a break on the salary. When a higher salary goes away, lower salary comes in, some benefits, so those are the things you have to look at, okay? So again, very good opportunity for school districts with the stimulus funding, but it does just pose some challenges on how to continue programs that you initiated as a result of the stimulus funds. Okay, so that's something that we're talking to all of our clients on, again, to just continue to monitor that piece. And when those stimulus monies go away, what do you do in years 3 and years 4? Okay? And then the other item, the debt service fund, again, nothing too unusual. Those are the dollars that I had mentioned before that came from unspent capital projects or premiums on bonds. In fact, you see a $375,000 premium on some of the bonds that you issued. Okay, you can see those dollars coming in the capital project fund. Okay, and you can see that negative $27 million is part of the capital project. And as you know, you have a very active capital project, a very few larger capital projects going on right now. And so that negative number just means you haven't issued the permanent financing. Okay, so you're paying those dollars with short-term borrowings. And when you issue the permanent financing, those negatives go away. And as you know, there's also an emergency project in there, and I believe you've built those dollars into your budget for 22-23 that's a little more in line with when the state aid comes in. And again, that's part of how you plan for significant emergency projects there, okay? So those are the operating funds of the school district. Do you have any questions on that, just before we look at this last statement? Okay, good. So the last statement, we as in the accounting world, I guess, try and make the school district look more like a corporation, okay? So we consolidate all of those operating accounts. We include all of your capital assets. We include all of your long-term obligations. We even have a net pension asset, some deferred inflows and outflows relating to the pension systems to help level off any significant changes, okay? And then we come down to a net position, all right? And so when we look at your net position, you know, you're fairly consistent with some of our other clients out there, although not all of them. But you can see that net position, a negative $194 million, right? So your assets and deferred outflows are lower than your liabilities and deferred inflows by $194 million, okay? And the reason for that is that very bottom number, you see that $270 million, that's your actuarial accrued liability for retiree health obligations, okay? So you hire an actuary, they come in and they review all of your contracts, and they determine what is the value that the district has committed to their employees when they retire, okay? And so that calculation is $270 million, okay? And in fact, that number actually went down from the prior year, about 49 million, okay? And there's reasons for that, and they're identified in the actuarial. Some of it is modifications of the rates, life expectancy went down, medical trend rates. So there's a couple items as to why specifically those dollars went down, but that number does go up and down based on your contracts and a few other items, right? And so your folks your actuaries do this calculation. We have to put it in the financial statements as a liability, but there is no funding mechanism. So therefore you have a liability, no funding, that creates that deficit net position, okay? So that's just something to keep in mind. It's not how you operate. So if you have retiree costs of $1 million, you budget $1 million and you pay $1 million. But, you know, as your medical costs increase and decrease and you have more retirees, that will impact your financial statements, okay? But again, it's not how you budget, not how you operate. But it is an important number to look at the fiscal long-term financial plan of the school district. And, you know, we work with about 70 school districts, and you're probably in the top 5% of our clients in terms of that liability. We have clients where that liability, in fact, I was just at another school district that's a $250 million budget, and their liability is 1/2 of their budget because of their way their contracts are structured, okay? We also have another $200 million client where their liability is 3 times their budget, okay? And again, your number is you know, almost 3 times your budget, okay, if not a little bit more. All right, so again, you know, when you want to look at it, how you compare on a budget size, right? But what that means is just how your contracts are structured, what types of programs you're in, okay? So again, very important when you look at the long-term financial plan, but it's not how you operate. Okay, again, you still operate on a pay-as-you-go basis, but those districts where that number is much lower, if there's any spikes in health insurance, they probably have an easier ability to manage it because their retirees are smaller, their share of the retiree liability is smaller, okay? There's a key item there. So again, that's the financial information, that's the 52-page document. Do you have any questions on that? Any other questions on the financial statements? Okay. All right, good. So again, the other document you have is the internal control communication, okay? And again, as part of the audit process, we do interview and review the different internal controls, checks and balances of the school district. We sit down, we interview your staff, we document the processes and procedures, the flow of the transactions. And again, I'm pleased to report no material weaknesses or significant deficiencies. Okay, so it's really where you want to be. These items are just procedural recommendations to enhance the checks and balances you have. We talk a little bit about reconciling the flexible spending account. You are monitoring that, but it's just a matter of making the year-end final adjustments for that. So again, you're monitoring it, but just a couple other steps. We talk about the school lunch claiming process, and again, last year we had some minor variances in there. You did claim those differences last year, but we did have a few minor differences this year again. So continue to work on that reconciliation process with the school lunch program. Payroll, again, we talked a little bit about this last year, just relating to some of the time reporting in the departments and how that gets rolled up into your payroll system. Just making sure that the departments are and the employees have good documentation in the departments to support the hours that are worked, okay? So what we're suggesting is developing something that would be consistent throughout the district, okay? It seems like there's some inconsistencies in some of the different departments on how they're doing it, okay? So just a recommendation to develop a specific procedure for everyone to follow, okay? The other item, again, we talk a little bit about cyber risk management. So this is just more of a communication. As you know, cyber risk continues to be a challenge. I just got an email from a client the other day where they were not hacked, but they had a potential problem because somebody had intercepted an email that went out to somebody else and they were changing account codes on it. If it wasn't for the district closely monitoring certain things, they could have gotten themselves in a little trouble. But, you know, it's happening, so this is just a communication. You have some processes and procedures in place, but, you know, certainly going through a cyber risk assessment on an annual basis, you know, someone coming in and look at your specific cyber program. Obviously, you work with BOCES. They have some checks and balances in their software and in their system, but still not a bad idea to take a look at it on a regular basis, okay? And then the last item is just one of the items you implemented, again, relating to the school lunch program and generating an operating profit for the program, okay? So again, you ended the year with in good financial condition. Right now, you're sitting over the 4%, and the board, you know, would like to, you know, hopefully make a decision on what to do that. Of course, you can stay over the 4%. We would include something in our management letter discussion that you're over the 4% if that's what the district chooses to do. But again, you know, many of our clients still look at these items and try and make decisions based on projections around June. So you have those allocations ready to go once your books are closed and so forth. So something to consider. I know, you know, in the past you wait until after the audit to kind of look at where you're at. But we do have some folks that will look at that. Probably the majority of our clients will look at where your financial results, your projected financial results, and make some decisions in June based on recommendations. And then once the year-end results are determined, then just a communication is made, this is what the decisions were. So certainly something that you folks can consider as well. All right. Any questions? You're welcome. And I apologize for being a little bit late. As you know, I was coming from another meeting and they actually asked a few more questions than they traditionally do, so. Well, you know, the stimulus funding, it is very new. And that district used about, again, a larger district, had $20 million of stimulus spending. And so again, when you have that much spending in 1 year, how much did you subsidize or pull out of the general fund, right, to use? Because that can happen. They're allowable expenditures. So we had a nice discussion on the importance of the long-term planning and that if those expenditures that you're currently using as part of the stimulus funding, again, there are a lot of great ideas out there. There are a lot of new programs. There are a lot of unique things that districts are doing to help really enhance the students' learning experience. And I think we're gonna find that there's gonna be some successful programs out there, right? And then how you blend that back into the general fund is really an important piece of that long-term plan. And those reserves really will help play a part in that long-term planning process. So the importance of the discussion and reviewing and funding the reserves is really a key part of the process that you folks are going through. Okay? Thank you.
Pam, you want to adjourn us?
Okay, at this time, we're adjourning the audit committee meeting.
Take a motion.
Motion.
Well, given there's two of us, I'll make the motion.
And I guess I'll second it.
All in
All in
favor?
favor? It was aye.
Yeah.